2. Into action. The 3 core functions. The project management core function. It is not by accident that the project management core function is at the center of everything. This is where it all comes together. The project management function is the single most important part of the entire language services provider. This is a fundamental truth, so we will repeat ourselves. The project management function is the single most important part of the entire language services provider. We realize this may be a somewhat controversial statement, so please allow us to explain ourselves in the following section. Project management, at its basic level, can be described as the process of managing resources within the constraints of the market influencers and support activities to add value to the customer. Resources can be defined as people, time, technology, and money, basically everything a company uses to deliver to their client. Sometimes this can mean that the project manager function is even responsible for managing the other 2 core functions of vendor management and sales. Where we often misunderstand the importance of project management is that we think it is only carried out by project managers. Project management is a function, not a title. Undoubtedly, many readers who cringe at our assertion that project management is the single most important function for an LSP may be forgetting this, thinking that we meant to imply that project managers are the most important people. So, for the purposes of this section, please keep in mind that even if we are using examples with project managers, these could easily be replaced by other team members who carry out the same functions. In the diagram below, we have identified project management as the function of managing resources in order to add value to the client. The project manager, working within the constraints of the market influencer and LSP infrastructure, is responsible for aligning the resources of people, time, technology, and money in order to create value for the end client. Figure 19. Project management is the function of managing resources in order to add value to the client. This shows a diagram how value is added at each stage to the customer during the project management function, with people, under which is listed translators, engineers, developers, desktop publishing, quality managers, and then time, under which is listed project scheduling, forecasting and planning, delivery, capacity management, and overtime. Under money is listed financial forecasting, invoicing, purchase orders, budgeting, and margins, and technology, under which is listed TMS and CAT tools, MT, QMS, and automation. People. Not all project managers actually have people reporting into them, though it is not uncommon that they have their own teams. But when we talk about project managers managing people, we need to broaden the conversation to include everyone being coordinated by the project manager, and not just the team that reports to the project manager. For example, a project manager may coordinate resources in an LSP across multiple geographic offices. Those team members may be reporting to regional managers for each location officially, but for the purposes of the project, they are essentially reporting to the project manager. Figure 20 shows a workflow for website localization. To illustrate, let's look at a situation in Figure 20 where a project manager manages a complex localization testing project for a piece of software. First, the files must be localized. Then, they go through quality assurance. The final localized software must be tested by language testers to make sure there are no bugs or issues. The project manager, of course, is responsible for overseeing the entire process. The process workflow would look roughly as shown in the example. Note, for those of you cringing at the simplicity of this workflow, keep in mind that this is for illustrative purposes only, and that actual workflows may be much more complex in reality. The engineering team may report to a completely different manager officially. Perhaps the project manager will have to coordinate with a separate shared services team for help with the glossary creation. For the final functional QA step, there may be yet another team in China reporting to a regional manager. Regardless of the official reporting structure, though, the project manager is the one responsible for coordinating and managing all the different people in the workflow to ensure that the project is completed successfully. The fact that these other team members do not report directly to the project manager limits his control over the process, and adds an additional layer of complexity to the project management process. The organizational structure is based on how you define your teams to better compete in your niche. This is so important that we dedicated a whole section to it when we talked about the 7 support activities of an LSP. As you are probably beginning to realize, the ability of an LSP to carry out the project management core function is directly affected by how it is structured. Let's discuss some of the challenges faced by project managers when dealing with different organizational structures. Direct reports. Sometimes it makes sense to have team members reporting directly to project managers. Some of the people that could commonly report to a project manager would be junior project managers, localization engineers, or quality managers. Additionally, technology managers, desktop publishing experts, testing managers, and other roles could also report directly to the project manager, but frequently don't. The organizational setup of a team can and does look very different from company to company and even from project to project. An advantage to having direct reports to the project manager is that it gives her a higher level of control over the team members. As a people manager, the project manager literally controls their time and can easily and quickly manage how the team members are allocating their time and where. Flexibility and agility are needed when managing complex localization projects, and it is useful for a project manager to be able to quickly reallocate team members where they are needed. If the project team members are not reporting directly to the project manager, then she needs to negotiate with their direct manager in order to allocate the time needed. In an LSP, where there are multiple clients, all with multiple projects and competing deadlines, it can become difficult to know how to prioritize each task. Everybody is busy all the time, so every time a task is worked on, it means there is a lower priority task that is not being worked on. If the project manager is managing the localization engineers directly, she has full control over how they are prioritizing their time. She has the authority to prioritize their time to make sure that this task is performed efficiently, also while balancing the needs of other projects that are no doubt happening simultaneously. For example, if an important client has a very high priority project, the project manager can have the localization engineer drop whatever they are doing and get this done as soon as possible. This is as simple as an email or a phone call to the localization engineer to make sure they understand the importance and to get to work immediately. However, there are also disadvantages to project managers directly managing their teams. Sometimes they are working on teams spread out globally, and it may make more sense to have the global team members report to local managers. In localization, it is very rare for any team to have the luxury of everyone sitting in the same office. The project manager's challenge becomes bigger if she is responsible for the direct management of those team members. On top of managing every aspect of the process, she will now have to become a true personnel manager and take on all the responsibilities associated with this role, which can be very time-consuming. All too often, we see project managers failing because they are given direct reports but are not properly trained on how to manage people. They may be great process managers, but managing people is a whole different ball of wax. If the project managers are to succeed in this area, they will need to work closely with their team members to set quarterly and yearly goals, to hold weekly one-on-one meetings with each direct report, deal with underperforming team members, do salary reviews, and motivate their teams. Being a people manager means playing many roles: teacher, counselor, hostage negotiator, HR lawyer, recruiter, and occasional executioner. This is a lot of responsibility for anybody, but for project managers it means that they will be left with much less time for more value-add tasks, as their time will be spent on support activities, which they are oftentimes not well equipped to do. So while there are certainly benefits to organizing teams with solid accountability to project management, there are also costs associated with such a strategy. Fortunately, the project management function can be carried out without having to load the project managers with extra support activity responsibilities. Teams can be organized separately and asked to collaborate under the guidance of the project manager. Indirect reports. When most people think about the setup of a localization program, They may think of a hierarchical structure set up with various functions reporting to the project manager who oversees the entire process. However, it is rarely so cut and dry. Rather than having a very clear and logical organizational structure with the project manager at the top, there may be multiple managers overseeing different regional or functional teams, and it may be only very loosely defined on how these teams interact and are accountable to each other. As we learned in the section on support activities, every LSP is different in how they choose to set up their internal structure. This book is not meant to dictate the best possible way to do this. However, an LSP should always be structured so as to empower the project manager to deliver value to the client. Every day, project managers have to deal with other internal teams in order to accomplish their project goals. This could be negotiating with the finance department on acceptable margins in order to get a new project approved, or dealing with an engineering team offshore to get more support for a project. The challenge here is that the project manager does not have direct control over these teams. In a direct reporting structure, a project manager can simply give orders and completely control the entire process. But in a situation where there are other internal groups involved, it is not so simple. It requires a certain degree of diplomacy to get things done. The downside to having decentralized internal teams is certainly less control over the end-to-end process, but the advantages can be significant. If a project manager does not have to manage the resources directly, his time is freed up to focus on managing resources rather than people. For example, if a project needs 23 hours of engineering work done, then he can request 23 hours of engineering work. She doesn't need to worry about who is providing the work, just whether or not the work will get done. She doesn't have to care so much if the engineer is happy about the work, if they're having a bad day or need to take some time off because their dog is sick. She doesn't have to worry about what the engineer is going to do for the remaining 17 hours in the week. All the project manager needs to worry about is the work request. This allows him to essentially remove the headache of having to deal with the people so that he can focus on managing the resources that the people provide. Don't get us wrong here. We do not suggest that people should be treated just like another resource. People are absolutely a company's number one asset and need to be treated well by an organization, especially in the language services industry. In the example above, we would assume that the poor engineer with the sick dog is being managed by a local team lead or engineering manager who has the time to properly motivate and manage that employee. It is crucial that this people management function still exists. This is why we have the support activities. In an organization that has decentralized internal team members, it simply means that the people management function is taken out of the hands of the project manager so that she can focus on managing the project and not the people. External team members, supply chain. In the previous sections, we discussed the advantages and disadvantages of project managers working with direct reports and with other internal teams. In addition to managing internal team members, it is also the project manager's responsibility to manage external team members. Typically, in an LSP, the actual language services are outsourced to either smaller SLSPs or CLPs, as we discussed in the section on structure of the industry. Managing external resources can present some unique challenges and benefits that the project manager needs to be aware of. The major benefit of managing external resources, whether they are SLSPs or CLPs, is that you are their client. In such a relationship, you would seem to have a higher degree of control over what gets done and when, since you are the one holding the purchase order. Just like with direct reports, the external vendor works for and is accountable to the project manager. The only difference is that with direct reports, the project manager is the boss, whereas with external resources, the project manager is the client. This means that in many regards, the project manager sets the terms of the relationship and, just as with decentralized internal teams, does not need to worry about people management and can focus strictly on managing resources. The project manager sets the deadlines and clearly outlines the expectations to the external team members, so this means the project manager pretty much has full control in such a relationship, right? Wrong. The difference between managing direct reports and internal team members and external vendors is that vendors can, and frequently do, say no. So while the project manager would seem to hold a lot of power in such a relationship, They only hold as much power as the external team members are willing to give them. This is one of the biggest challenges of managing external resources. Again, a certain degree of diplomacy is involved here, and project managers often finds himself in the position of having to negotiate with vendors for every project, all the while trying to keep them happy. If the project manager treats the external team members poorly, he will soon find himself in a position where he cannot deliver on the projects because all his vendors are refusing to work with him. An argument could be made that much of the responsibility for managing these vendor relationships should fall on the vendor manager, which is somewhat true. A smart project manager will work closely with the vendor manager to make sure the supply chain is functional and productive. But at the end of the day, it is the responsibility of the project manager to deliver the projects, and therefore it is the responsibility of the project manager to also make sure the supply chain is healthy and able to do this. Time. After managing people, the second resource that the project manager is responsible for is time. Every project comes with a deadline, and it is the job of the project manager, or whoever is carrying out the project management core function, to make sure that the deadline is met. Most activities in our industry take a set amount of time, with very little variation. There are standard throughput metrics that are generally accepted throughout the industry. Desktop publishing specialists can format 10 pages per hour. Translators can translate 2,000 words per day. An experienced translator will undoubtedly be able to translate more words per day than an unexperienced translator, but the difference in throughput is not going to be that big. Similarly, engineering tasks, testing, quality assurance, and other necessary project tasks are going to have pretty standardized throughputs throughout the industry. So if most tasks in the industry are standard, then shouldn't all LSPs be pretty equal in their ability to deliver projects on time? Companies are able to differentiate themselves on timelines through effective project management. Sure, throughputs for translated words per hour may be pretty consistent across the industry, but how those translation projects are managed is where companies are able to really set themselves apart. Think about it. A translator can translate 2,000 words per day, but a typical 2,000-word project can take anywhere from a couple of hours to a couple of weeks. This is because there are a lot of other moving pieces to the project that need to be scheduled and managed by the project manager. Figure 21 shows the impact of proper and poor planning on the timeline of a translation project. Looking at the life cycle of a typical translation project, the majority of the time is spent with a file waiting in somebody's inbox, waiting for work to begin. A client emails a file for translation to an LSP where it sits for a couple of hours until a project manager opens the file. She then emails it to an engineer with whom it sits for a few more hours. The file eventually whizzes off to a translator who ignores it for a few more hours before declining the project, so the file is sent to another translator, and so on. All of this, and not a single word has been translated yet. The challenge here is not the speed at which tasks can be performed, but rather the efficiency with which multiple tasks can be managed. The project manager is responsible for setting the schedule and planning and allocating resources in the correct amounts and at the correct times to ensure that the project keeps moving forward. The better the project management, the less time that file will spend sitting in somebody's inbox, and the sooner it will be delivered to the customer. Technology. One of the ways a project manager can ensure the project moves forward in the most efficient way possible is by making sure the right technology is used throughout the project. There are so many different types of technology available, it is impossible to list them all here. We could even include things as simple as calendars, Gantt charts, and tracking spreadsheets. But there are three major classes of technology that the project manager should always have at their disposal when managing a localization project: project management technology, computer-aided translation, or CAT tools, and machine translation. Project management technology. Project managers must rely upon some sort of technology to help them keep track of their projects. This is especially true in the language services industry because the majority of localization projects have the added complexity of being managed for multiple markets at once. A software development project manager has one product to manage, but when that product is sent for localization into 10 languages, the LSP project manager now has 10 projects to manage. This can quickly become overwhelming if the project manager is not using some sort of technology to help track the progress of each project. Emails will keep piling up, and the project manager can't keep up. Some LSPs develop their own in-house project management software, which tracks project status from start to finish. Other LSPs choose to purchase third-party software. As CAT tools evolve over time, many of the leading tools that are already used for translation now have built-in components to help manage workflow and provide real-time reporting. However, if LSPs do not have the money to invest in fancy project management software, there are options. You may not need to buy the yacht just to cross the lake. There are a number of open source, i.e. free, products available that offer basic project management functionalities. We would encourage each project manager to search and see what is out there. Or if simplicity is the goal, there is absolutely nothing wrong with simply tracking projects in a spreadsheet. This is such a common practice, you may not even consider it as quote-unquote technology, but it most certainly is. The project manager's job is to manage the project in the most efficient way possible, and she has a responsibility to utilize any technology to that end, whether that is an expensive project management software suite or just a humble spreadsheet. CAT tools and machine translation. CAT tools are by far the most crucial piece of technology available in the industry. These are powerful tools in the hands of an experienced project manager. For the uninitiated, we will explain. CAT tools are able to take content from virtually any type of file and put them into a translation-friendly environment for translators to work on. In addition, they automatically create and maintain translation memories, or TMs, which are large databases of previously translated content. Thus, you can leverage content translated in the past and not have to translate everything from scratch for each new project. Really, a whole book can be written on this technology, but that is not what we are trying to do here. Our focus here is on how CAT tools can be a powerful asset for project managers. CAT tools and their various features are usually managed by more experienced localization engineers who specialize in this technology. But an experienced project manager should have at least a basic working knowledge of the different CAT tools on the market and the strengths and weaknesses of each one. Ultimately, she will be responsible for defining the strategy around which CAT tools to use in which circumstances. This decision will impact the amount of time spent by the localization engineers managing the CAT tools and the file processing, and it will also impact how efficiently the translators are able to work. Furthermore, by taking advantage of the TMs, the project manager is able to have more control over costs, as the TMs can greatly decrease the amount of words that need to be translated. There are also a number of tools available that allow for automated quality assurance checks to be performed on translated content. Sometimes this functionality is built into the CAT tools, so this should be taken into account when selecting which CAT tool to use. Other times, though, these automated checks are either third-party applications or developed internally in LSPs. Regardless of the source, it is the project manager's responsibility to ensure that such tools are being utilized in order to ensure high-quality deliverables to the client. In addition to CAT tools, there is also the availability of machine translation, or MT, which is becoming more and more ubiquitous in the industry. There are a lot of misconceptions out there surrounding what MT is and what it isn't. We have pointed out that it is not a magic wand. MT is not a replacement for translation. Instead, it is a tool that can be used only under circumstances to increase translation throughput and lower costs. An experienced project manager will have a working knowledge of how MT can be implemented in their projects in order to add value to the customer. Money. We like making money. That's why we took some of your money in exchange for this book. We are going to go out on a limb here and speculate that most people are like us in this regard. The language services industry certainly has a lot of people who are truly passionate about what they do, and this has inspired many people to go out and start their own companies. However, passion does not pay the bills, and at the end of the day, a company or even an individual needs to make a profit for their activities, or they will go out of business. Margin is king. If you are not making a margin on the work that you are doing, you are working for free. Many companies fail because they are not able to make a margin on the services they provide, and usually this is because nobody understands whose responsibility it is to look after this margin. Is this the responsibility of the sales team to negotiate higher selling rates with the clients? Is it the responsibility of the finance team to manage assets and overhead cost allocation better? Is it the responsibility of the supply chain manager to negotiate lower costs with the suppliers? Please allow us to clarify here. Project margin is the sole responsibility of the project manager. Before you get your torches and pitchforks out, let us just say, as we are writing this, we are cringing. Well, Tucker is cringing. Renato is cheering. This is because Tucker comes from a project management background, and this is forcing him to think back on all the unprofitable projects he has managed throughout his career and take a little personal responsibility for that. Renato comes from a sales background and is tired of hearing project managers complain about the sales team not negotiating higher rates. So allow us to clarify what we mean here, so that we can put some of our project manager readers at ease. When we say that margin is the project manager's responsibility, we mean that once a contract is signed and work commences, the project manager, or whoever is carrying out the project management core function, is the one person who is in the position to either make money or lose money on that project. That is because the project manager manages all the resources for the project, as we have been discussing above. Mismanagement of people, time, or technology means that costs will exceed revenue and the company will lose money. Sure, sometimes a project manager is set up to fail because of factors outside of his control. In such a case, it is usually because there is a lack of support from one or more of the 7 LSP support activities: management, structure, culture, finance, facilities, HR, and quality assurance. Sometimes it is the failure on the part of the other core functions, such as when a sales team closes a deal and agrees to rates that are too low, or the vendor manager is not effectively negotiating with the vendors. These are all reasons why a project may lose money, but they are not excuses. At the end of the day, like it or not, margins are the responsibility of the project manager. We are not necessarily saying that this is always fair. We understand this. The project manager is the one who creates a project budget to maximize revenue and reduce costs. To maximize revenue, she will be the one to provide quotes to the client and negotiate rates. To reduce costs, she must assign resources and make sure they stay on track and take advantage of available tools and technology to streamline processes and reduce costs. All this rests on the shoulders of the project manager.